The abrupt demise of two popular digital coins in early May stunned investors, wiping $400 billion, that's £318 billion off the value of numerous other cryptocurrencies, including the most valuable, Bitcoin. Bitcoin has dropped in value in recent weeks, as have Ethereum and other cryptocurrencies. Coinbase, one of the top 3 crypto exchange platforms, and Robinhood, which facilitates crypto trading, have seen their shares tumble with Web2 tech companies like Amazon and Netflix. Even the popular proof-of-stake network Solana's token has lost approximately 80% of its value from its all-time high in November. The real crash, however, occurred when the leading algorithmic stablecoin, Terra USD or UST, plummeted. A $100 investment in UST was once worth only $18. As of May 24th, the crypto turbulence is in its 9th week, and Bitcoin is still feeling the shocks. Market indicators for the largest cryptocurrency, which has lost a third of its value in only 2 months, are flashing red or amber for everything from technicals to turnover. So what now? Is this the end of cryptocurrencies? Hey guys, this is Crypto Rocket. Welcome to a brand new episode. It promises to be interesting. Don't forget to hit that subscribe button and turn on the notification to get updates whenever we drop a new video. Also, don't forget to smash that like button and comment in the section below if you have any contributions. Let's get into the video. How much have crypto markets dropped? After 9 weeks of consecutive sell-offs, the crypto market is still shivering. Technical turnover is flashing red or amber on market indicators for the flagship crypto, which has lost more than 33% of its value in just 2 months. In fact, the macroeconomic climate is hostile to an asset class that is now widely regarded as volatile, dangerous, and inflation-prone. What you should know. Investors are already nervous about the value of their investments, as Glassnode reported on May 9th that Bitcoin's current price of $33,600 has put 40% of investors underwater on their holdings. The pioneer crypto dropped more than half its value since its top of $64,000 on November 10th. It struck a 17-month low of $25,401 a few weeks ago after hitting a 17-month low of $25,401 on May 12th. Traders have positioned themselves for an increase in Bitcoin's price, according to the CFTC, as indicated by their greatest net long position since the contract was created in 2018. The entire value of all crypto assets is just $1.3 trillion now, a fraction of what it was in November when it peaked at $3 trillion. According to data provider CoinGlass, the Bitcoin Fear and Greed Index of Market Sentiment, which runs from 0 to 100, is hanging around 13. Although global interest rates and geopolitical tensions are concerning, US stocks appear to be confirming a bear market, and cryptocurrencies are not a popular investment in an era of near stagflation. After the collapse of Terra USD in early May, investors are fleeing altcoins that contain stablecoins that are regarded as high risk. Only 2 crypto assets, Bitcoin and Ethereum, 2 of the largest by market capitalization, are likely to survive in the long run, according to Guggenheim's chief investment officer. The bulk of crypto assets, according to Minerd, are junk rather than currencies. Now cryptocurrency values are plummeting across the board, and many ordinary people who bought into the crypto hype peddled by Damon, Jimmy Fallon, Kim Kardashian, and a slew of other celebrities have lost everything. The stablecoins Terra USD and Luna are at the center of the storm, and their subreddit has been flooded with heartbreaking anecdotes and suicide prevention hotlines in recent weeks. "I lost about 450,000 USD and I can't pay the bank," one person commented. "My house will be sold soon. I will get evicted. For me, suicide is the only way out." If you invested $100 in Luna 1 month ago, in the 4th almost popular cryptocurrency of all time, you now have about $0.04, according to one viral tweet. Minutes later, the post was amended to show it was worth less than a penny. Luna is currently worth $0.0003, while the Terra USD currency, which is supposed to be algorithmically fixed to $1, is currently at 11 cents. Meanwhile, Bitcoin, the oldest and most frequently held cryptocurrency, has lost more than 16% in a week and more than 50% in the last 6 months. Many ordinary individuals who were duped into believing that crypto was their road to financial security will be wiped out if its value continues to fall. El Salvador's whole economy, which designated Bitcoin a national currency last year, might default. Despite this, many crypto billionaires continue to advise consumers to hodl on, That is, do not sell your crypto. The best is yet to come. Billionaire Michael Saylor, a type of father figure to Bitcoin lads, tweeted, "Of course, hyping currency that isn't backed by any governments and isn't linked to any real products or assets can enhance what people are prepared to pay and therefore their stated worth." Cryptocurrencies and NFTs and other crypto-related assets have been dramatically inflated over the last 2 years, thanks to ultra-low interest rates, which have created a lot of easy money to invest in equities, financial instruments, and crypto. Cryptocurrencies have created an even wilder Wild West than Wall Street, which is already out of control in the crypto realm. Pop-up currencies, Ponzi schemes, and pump-and-dump schemes are freely discussed and frequently pushed for. In December, one blogger concluded a piece with the rallying cry, "Join a pyramid unless it bursts. It's not a bubble." The issue with bubbles, though, is that they always burst. The worth of commodities that underpin bubbles grows only as long as people want to buy what you're selling. What you're selling with cryptocurrencies is a made-up token that exists only in cyberspace. Investors are pulling back from the most volatile assets such as cryptocurrency, now that the Federal Reserve has suggested that interest rates would be raised numerous times this year. Terra and other stablecoins were created to help decrease the volatility of cryptocurrencies. They are, however, the most likely areas for the crypto ecosystem to crash, as many crypto doubters have warned. Stablecoins, as the name implies, are meant to be the foundations of the crypto ecosystem, anchored to real-world assets like the dollar. Stablecoins are used by exchanges to smooth out the volatility of other coins, and crypto investors may prefer them as a safer place to put their money. They've done a good job so far. Yet concerns about consumer safety and the possibility of illegal conduct have piqued authorities' interest. Stablecoins are tokens that are tied to an asset, typically the dollar, but may be traded at the speed of a blockchain and without the hassle of regulations. Crypto traders use them to purchase and sell other cryptocurrencies, as well as to hold on to their assets when they want to avoid risky currencies. They're so important to crypto exchanges' operations that they're commonly referred to as their plumbing system. Tether, the most popular stablecoin, accounts for over 70% of all Bitcoin trade. However, stablecoin stability is based on one of two unsustainable concepts. One method is to use a backing reserve in which each digital currency symbolizes a dollar held in a bank account. This model is used by Tether, albeit no one knows how much of a dollar reserve they hold. The New York Attorney General said Tether recklessly and unlawfully covered up enormous financial losses to keep their scheme operating and protect their bottom lines. There are just too many billionaires with far too much at stake for crypto to fade away quietly. The other concept is a Terra-style algorithmic stablecoin. The issuers of these stablecoins say that price stability will be maintained by a programming code that adjusts the number of coins available in reaction to price movements above or below its dollar peg, bringing prices back into line through supply and demand adjustments. Every algorithmic stablecoin thus far has failed to hold its peg, said crypto skeptic David Gerard. Stablecoins based on algorithms work until they don't. Even as mocking memes flood social media and skeptical news outlets declare the start of a crypto winter, a term used to describe a period of public disinterest and lack of technology innovation, crypto executives and investors aren't just betting on the crypto ecosystem will return to its glory days. They're making preparations, and even the word winter implies that there will be spring for those who persevere. Do Kwon, the founder of Terra, sent a threaded post to the Terra community on May 11th outlining his strategy to resurrect the stablecoin and ensure that it would come around. He added, "Short-term setbacks do not define your potential. How you respond is what matters." Coinbase CEO Brian Armstrong is also asserting a complete focus on the future, with the company's stock recovering half of its value recently. Volatility is inevitable, Armstrong said in an internal document that he made public. "We have no control over it, but we can plan for it. I just know that if we focus on what matters most, building, we will make it through and emerge stronger than before." So is this the end for crypto? When prices are falling, it's tempting to make such a prediction. And when you, like me, would like to see Bitcoin wiped off the face of the planet, unfortunately this appears to be doubtful. Terra, Luna, and hundreds of other minor coins are set to crash. Many people will lose their clothing, homes, and other valuables in the process. But there are far too many billionaires with far too much at stake, not to mention a vast, energy-intensive Bitcoin mining sector, for crypto to fade away quietly. Yet, without a doubt, the crypto mask has been pulled off. that it is an efficient get-rich-quick program, that Bitcoin is the currency of the future, or that it is an inflation hedge. Most significantly, there is a cryptocurrency movement out there led by billionaires who want us all to get wealthy together. It couldn't come fast enough if this is the start of the end of this fantastic tale. That's it for this episode on Crypto Rocket. If you have any contributions, let us know in the comment section below. And if you enjoyed the video and want to see more, give this video a thumbs up below and also click the red subscribe button and turn on the notification bell icon so you can get alerted every time a new video is uploaded. Thank you for watching.